What's good, people? Welcome to another banger episode of my channel. Today I'm bringing you a lot of fuego. So today I'm going to be doing a deep dive into a company that I believe is going to be giving you 100 to possibly 1,000% return on your investment. So back in May 2020, I made a post here about 5 disruptive companies that people should be looking out for and watching. And on this list, there's a company called Opendoor. So now Opendoor is a company with a ticker OPEN, O-P-E-N, on the stock market, and they were founded in 2014. And Opendoor is a company that facilitates a market between buying and selling properties. So we're talking about buying real estate and selling real estate, and they also allow people to refinance their mortgage plans on their real estate properties. So now the thing that makes this company really interesting is this company is looking at a market of over $1 trillion. So a $1.6 trillion market that hasn't had the penetration from online technologies company. So if you look at the current market space right now, iBuying, which is the art of using technology to buy and sell real estate properties. iBuying in the real estate market of $1.6 trillion is only 1%. So 1% of the $1.6 trillion real estate market is from iBuying right now. And this current market space has a trajectory to grow. Real estate is one of the only industries that has not been penetrated by technology, especially the internet technology, because it's difficult and it's a large-scale business transaction rather than buying something at the store for $10, $20. You're buying properties for hundreds of thousands of dollars. So there's a lot of risk, and there's a lot of eyes watching. There's a lot of due diligence that has to happen in order for this process to go smoothly and happen. It's not just a regular transaction. So then the difference between Opendoor and the Zillows and the Redfins of the market is, number one, Zillow is a company that focuses more on the data of the property. So Zillow brings you an aggregate of all of the properties in the area, whatever zip code you want, wherever you're at. They show you, okay, these are the properties in this area. Here is an estimated price for these properties. Here is an estimated mortgage that you would possibly be paying for these properties. Here are some other information that you can get from these real estate properties in area. Here are some schools around the area. Here's this, here's that. They give you information. So Opendoor you can basically think of as the Amazon of real estate in the coming years. So Opendoor just listed in the market on July 2020, very, very, very recently. So they recently just IPO'd, and they are currently at a price of $34.59 as of today that I'm talking, and they also have a market cap of $19.9 billion. Whenever you're evaluating a company, you typically want to look at a few things. One, you got to look at what the company is, what they're doing. Two, you got to look at the financial data, so the financial health of the company. How are they doing with money? How are they managing money? Where are they spending their money? What are they putting it towards? And then three, you got to look at the qualitative factors around that company. So these are not in particular order, but these are things you got to do to filter. After the financials, then we're going to go ahead and look at the qualitative information surrounding this company. So we're going to look at some macros. We're going to look at what's going on in the U.S. economy, what's happening in the real estate market, or in the real estate industry specifically, and how can Opendoor penetrate this market and possibly grow. And then we're going to look at other analysts, see what they have to say about the company, see what their outlooks are, and then we're going to also talk about other people that are bullish about this idea and what they have to say as well. First of all, you can see here that the analyst recommendation is sitting at a 1.7. So this is sitting between a strong buy and a buy. That is a great position to be in. Analysts are recommending that you buy this. So it's always good, not necessarily saying you should follow what analysts say, but it's always a good idea to double check what you're trying to do and see what else people are out there doing. It's a sanity check. There's a guy called Chamath, and I always butcher his last name, Palihapitiya. So Chamath Palihapitiya, he is a legendary guy, right? So he's currently the founder of Social Capital, Hepidocial, something like that, Corp. So basically what they do is they're a SPAC, so they're a special acquisition company. So they, merge, they do a lot of mergers with a lot of tech companies that typically don't have the access or opportunity to go public. They help them go public through a merger and acquisition. He's the guy, he's very, he has his company, Virgin Galactic as well. And they're trying to go to space like everyone else, like Elon Musk and the rest. But he's a very successful investor, and he has had a lot of successful calls like Tesla, but that was very obvious for a lot of people. But still, he was very right about that, and he's still very bullish on it, and a few other companies. So, and cryptocurrency as well. So he's very bullish on that as well. So they released a SEC filing report, or they made a SEC filing report with the SEC. Here it says, Opendoor's mission is to empower everyone with the freedom to move. Since our inception in 2014, we have reimagined the residential real estate transaction with a consumer and technology first mindset. We believe the following are core advantages and differentiators for our business. Number one, consumer first orientation. We have a singular, unwavering focus on inventing products and services for the consumer. We are building direct relationships with home sellers and buyers through on-demand, digital, and self-service transactions. Our North Star is to deliver a world-class customer experience. So first things first, if you go on their website, it looks like it's very easy to make an offer when you want to buy something or sell something. They also have a portal for agents too, to make offers and sell offers. So I know a lot of people are thinking, what about real estate agents? So this platform is not trying to eliminate real estate agents from the equation, instead integrate them in a way that expedites the process. So going into the second thought here, it's vertical integrated platform. Instead of relying on the current mostly offline human intensive process, we have created a scalable and integrated home transaction platform, utilizing technology to streamline the consumer experience and reduce costs. This platform encompasses consumer-facing software, internal tooling, customer fulfillment, and capital market operations. This foundation enables us to easily build and offer additional integrated products and services over time. So this is really huge, because when you look at this, originally the beachhead market that they were looking at was buying and selling real estate properties. So then very, very recently, actually, a few years ago, after their launch, they introduced refinancing. So refinancing, for people that know real estate, is the process whenever you've entered a deal and bought a property and you want to get a better loan offer. So in order to pay the high interest loan, people usually refinance their properties so they can get a cheaper loan with a cheaper interest rate. So they offer loans as well. So they're not just penetrating the major beachhead market of buying and selling houses, but they're looking at the adjacents of it. So home loans as well, which is really huge. So then the third point is pricing accuracy and automation. We have invested significant engineering, data science, and operations resources in our pricing infrastructure. Our proprietary machine learning based pricing models are key to our ability to acquire and resell thousands of homes per month accurately, profitably, and with increasing levels of automation. Based on our historical results, we believe pricing performance will continue to improve with operating experience and scale. So this is huge as well. You can see that the thing with machine learning is the more data you feed it, the better it gets, and the more they grow, the faster they scale, because it's very exponential in terms of how many properties they sell and how better they are able to get financial data of like pricing projections for houses and like projections for appreciations, and like trying to sell properties based off of that. Opendoor is also here reporting that their revenues are growing more than 150% in the last 2 years, and they sold 19,000 homes, generating $4.7 billion of revenue. So here you can see again that they represent a $1.6 trillion category market here. And what they're trying to do is take the process of what has already been done and replicate it in the real estate market. You can see here, we were in the past, getting a booking a flight was very difficult. Ordering food was difficult. Now they're trying to do the same thing to simplify the process of buying a house. Buying a house is very tedious, very expensive, and it's very time consuming. So if they're able to reduce the time frame even by a couple days, it makes them a lot more valuable. So now, in just 6 years of operation, Opendoor here was able to capture 1.7% of the market space in 21 markets in real estate, and that's crazy huge because, as you know, real estate is a very, very big market, especially with the tons and tons of real estate agents and agencies that have already established their names and their brands over the course of time. So that was a brief overview of Opendoor. I don't want to go too much in detail about what they were discussing. If you want to see more about what they said to SEC, I'm going to put the link below in the description. That way you can get a better read by yourself. So then let's go closer into the financials and the income statement that they reported to the SEC. So here you can see that in 2015, very, very low volume happening with their revenue, but then you see significant growth into the millions, so in thousands actually, so into the billions. So you can see here that they had a revenue of $1.9 billion for the 6 months ended June 30th, so just the 6-month period. I'm not sure why they were only disclosing 6 months in 2020 and 2019. There's probably more information regarding that inside the report. So here we can see that there is a drop in the revenue reported from 2019 to 2020 by about $300 million, which is it's a decent amount drop for me to notice what is going on. Also, if you look at the year total of 2019, you can see they reported $4.7 billion, whereas 2020 is inching up at $2 billion towards half the year. Opendoor actually is here to explain what happened in that year. So it says here, revenue decreased by $278.7 million, or 12% for the 6 months ended June 30th, 2020, compared to the 6 months ended June 30th, 2019. The decrease in revenue was primarily attributed to lower sale volumes, reflecting the decline in our inventory levels in response to COVID pandemic. C, they listed a business impact of COVID-19 resource. We sold 7,832 homes in the first half of 2020, compared to 8,985 homes in the first half of 2019, representing a decrease of 13%, while the average resale home price remained flat between periods. We operated in 21 markets as of June 30th, 2020, compared to 20 markets as of June 30th, 2019. So this is huge information. So what they're saying here is the reason that their revenues went down is because of, first of all, COVID-19 pandemic, but also, and related to that, their inventory levels, so the amount of houses they got to be able to sell also went down. Showing here that not only did they go down in revenue, but they actually went up in terms of scalability, so market size. So they just added one more market to the table. Market meaning a new city, a new environment, a new place where they're operating, buying and selling properties and marketing and being more of a presence. Let's go closer into the balance sheets. So in balance sheet here, we can see the assets that Opendoor has in thousands. So we see here that in 2020, they have reported $1.2 billion worth of assets, total assets. It looks like over the years, in 2019, they had $2.2 billion. So that's a drop of $1 billion, which here you can see actually makes a lot of sense. So if you look at their total current liabilities between 2019 and 2020, you see here in 2019, it was $1.1 billion versus in 2020, it's only $282 million. So it seems like they paid off almost $1 billion worth of liabilities, which is great for a company because, again, your assets to liabilities, if your assets are way higher than your liabilities, then you're in a great position. So here we can see that they have almost a 2-to-1 ratio in terms of assets to total liabilities. This is a great position to be in. It's amazing for what you're getting. You're getting bang for your buck with this company if you're invested in it right now, because you're paying for assets and not liabilities. So now, as we just saw, this company is in a great position when it comes to your assets versus liabilities. So I don't want to go too deep into price and earnings ratio or a lot of different other ratio, price to sales ratio, because I don't think they're necessarily relevant at this time, especially for a young company like Opendoor. They're possibly going for scalability and growing in the market, not necessarily trying to make earnings. So that's not going to be reflected right now. So I would say keep that in mind, but also make your own decisions on how you want to invest. If they don't fit your earnings category, they don't fit your earnings category. So moving on, I want to show you a little bit more about Chamath Palihapitiya. So in September 15, 2020, so a few months ago, he said, big news, IPOB is merging with Opendoor and will take them public. More than $1 billion is being invested to help Opendoor build a legacy company. This is my next big 10x idea, memo attached. He said, stay tuned. So if we look closer into this post that he made, he dropped an investment thesis, which we want to go into as well. So here he says, summary, all forms of buying and selling are moving online, accelerated by the need for convenience, speed, trust, and safety. The coronavirus pandemic has further highlighted this. So second point he made here was real estate is the largest undisrupted form of buying and selling in the United States, worth more than $1.6 trillion annually. So now the current experience is offline, slow, inconvenient, low net promoter score, and 28% of brokers do it as a part-time job. Buying online is still underpenetrated relative to other markets, less than 1% of the total market, but it's growing quickly. So now if you look at this, just looking at this first two bullet points, he's pointed out the growth, the market size that we're looking at. He's pointed out why this is a problem and what they're hoping to solve. So then his qualitative analysis here says, Opendoor is a market leader in the ability to buy and sell your home online. Through the combination of a better product, machine learning, and streamlined operations, a consumer can go to opendoor.com and use the Opendoor mobile app and close on a sale of their home in as little as 3 days. That's huge. Opendoor makes any necessary repairs to the home and sells it to a new consumer, keeping the difference between the buy-sell price, plus charging a service fee. As Opendoor buys more homes in the market, they gain share and refine their playbook. This allows them to expand into new markets with a proven playbook. They are in 21 markets now with plans for continued expansion across the United States. So now they're only in 21 markets without a lot of large cities involved in this. So as they continue to grow, they will be penetrating larger markets and having more volume. Penetration is going to continue to grow as iBuying continues to grow. So here again, you can see as they buy and sell homes, they have the opportunity to attach other value-added services. They have already launched title and escrow and financing services and have plans for many others in the future, including home upgrades, maintenance, and warranty services, which we expect will increase contribution margin and profits over time. Current value-added title and escrow services attach at almost 80% by number of transactions. So 80% of transactions happening come with title and escrow services. So they are upselling. So they're offering the service and they're attaching upgrades, additionals to it, and giving their customers an opportunity to go in and lock it in. And people are doing it, it seems, at an 80% rate. So this is a very successful add into their business. So now again, it says more homes bought and sold and more value-added services offered improves the products and allows them to save money for consumers, which in turn drives more demand to Opendoor where the cycle compounds. This playbook at 4% share would create a company with more than $50 billion in revenue in as many as 100 markets. So currently right now, you can see Opendoor is $19.9 billion. Here Chamath is saying at 4% share of this market, they will be at $50 billion and as many as 100 markets. So we're looking at 5x very, very soon. Next up, I want to talk a little bit about the top mutual funds holder in our company, Opendoor. So first on the list here, we have ARK-INVEST with their ETF, ARK Next Generation Internet ETF Trust, with over 3 million shares. So you can see here, ARK-INVEST, one of my very favorites, Cathie Woods, is the CEO, and this lady, I'm telling you, I kid you not, is beating the market with every single one of her mutual funds and investment trusts. Search up ARK-INVEST and see whatever you want to find out about them. Crazy. They're the most research-driven company pushing next generation technology. Look into that company. And you can see here that the second biggest holder is also, again, ARK-INVEST. So she's not only going in once, but she's doubling down on this investment. She's saying here with her second investment in FinTech Innovation ETF with almost 1 million shares as well. So now as I close out this video, I want to bring you the risks involved in buying into this company. So here, Opendoor also released a risk analysis to the SEC. It says risks related to Opendoor's business and industry. So the first thing first is COVID-19 has adversely affected our business and may continue to adversely affect our business. Our success depends on a high volume of residential real estate transactions throughout the markets in which we operate. This transaction volumes affects all of the way that we generate revenue, including our ability to acquire new homes and generate associated fees, our ability to sell homes that we own, the generations of commissions from our brokerage business, the number of loans our mortgage business originates and potentially resells, and the number of transactions our title and settlement business closes. The COVID-19 pandemic has significantly and adversely affected and may continue to significantly and adversely affect residential real estate transaction volumes. For example, beginning in March 2020 through the second quarter of 2020, governmental authorities put in place limitations on in-person activities related to the sale of residential real estate. As a result, we decreased acquisitions of home inventory and decreased the volume of home inventory on our platform. We sold 7,832 homes in the first half of 2020 compared to 8,985 homes in the first half of 2019, representing a decrease of 13%, and decreased our inventory from $1.3 billion as of December 31st, 2019 to $264 million as of June 30th, 2020. We cannot assure you of long-term impact on the business on our growth of these responsive measures as a result of COVID-19. We believe that COVID-19's impact on our business transaction volumes depends in part on the impact of potential limitations imposed by governmental authorities on processes and procedures attendant to residential real estate transactions, such as in-home inspections and appraisals and in-person showings and county recordings, as well as COVID-19's overall impact on the U.S. economy. We believe that consumer spending on a real estate transaction may be adversely affected by a number of macroeconomic factors related to COVID-19, included but not limited to increased unemployment rates and stagnant or declining wages, decreased consumer confidence in the economy and recessionary conditions, volatility and declines in the stock market and lower yields on individuals' investment portfolios, and more stringent mortgage financing conditions, including increased down payment requirements. Downturns in the U.S. residential real estate market, both seasonal and cyclical. Also, the continuing or future impact of COVID, which they just spoke about, potential governmental and regulatory changes or requirements in response to the COVID-19 pandemic, and changes in national, regional, or local economic real estate market conditions. And then they close out with talking more about slow economic growth, increased levels of unemployment, declines in real estate market, illiquidity of residential real estate, so the inability for people to quickly buy and quickly sell those properties, overall conditions in the housing market, including macroeconomic shift in demand, increasing in costs for homeowners, such as property taxes, homeowners association and insurance costs, low levels of consumer confidence in the economy, low inventories, increased mortgage interest rates, changes in household debt levels, volatility and declines in the stock market, and a few other natural disasters. So here, if you really want to take a closer look into the risks, they lay it down very nicely. So you can see the factors that are possibly going to be affecting how the stock price changes over time and the value of the company is going to move. If you want to trade on the short term, you can take a look closer at these details that they've listed, such as if you look at natural disasters, for example, and you compare the markets that Opendoor is currently in